Title slide. Financial Reporting Unit Number 2, Audit Risks and Planning. Topic: Identifying and Assessing Audit Risks.
Jamie, identifying and assessing audit risks is such a crucial part of our work. Without a thorough understanding of these risks, our entire audit could be compromised.
Absolutely, Alex. It's the foundation of a successful audit. We need to dive deep into the business environment, understand the industry, and look at the company's operations to spot any potential risks.
Let's start with understanding audit risks. Essentially, audit risks are the risks that the financial statements might have significant misstatements. It's our job to figure out where those might be.
Right.
And there are several techniques we can use for this. For instance, interviews and discussions are incredibly useful.
Talking to key personnel, like the CFO, can reveal concerns such as foreign exchange risks that might affect the financial statements.
Another important method is analytical procedures.
By analyzing financial data trends and comparing them to industry benchmarks, we can spot deviations that might indicate risks, such as improper revenue recognition.
Observation and inspection are also critical.
Physically verifying inventory counts and inspecting assets can give us first-hand evidence of the effectiveness of existing systems and controls.
Yes, document review is another key technique. By examining financial documents, contracts, and previous audit reports, we can uncover recurring issues or compliance lapses. Don't forget about risk workshops. These collaborative sessions with management help brainstorm potential risk scenarios, often using techniques like SWOT analysis to systematically explore risks. And let's not overlook technology-enabled data analysis. Advanced software tools can analyze large volumes of transaction data to detect anomalies or patterns that might suggest fraud. That brings us to risk assessment tools. Risk matrices are great for visualizing the impact and likelihood of identified risks, which helps in prioritizing them.
Checklists and questionnaires are also essential. They ensure we consider all potential risks. For example, a well-structured audit risk assessment questionnaire covers general company information, internal controls, financial reporting, IT systems, and more.
Speaking of documenting risks, it's vital to create a risk register that lists all identified risks along with their sources, potential impact, and probability. This helps in mapping risks to specific audit objectives. And when it comes to control deficiencies, we must document these in detail, describing failed tests, examples of exceptions, and the potential consequences on financial statements.
Absolutely, Jamie. It's crucial that our documentation is thorough and precise to ensure we address any issues effectively.
Modern audits often use documentation tools that integrate risk assessments directly with audit plans. This helps maintain dynamic documentation that can be updated as new risks are identified. Linking documented risks to testing plans ensures a responsive and targeted audit approach. This way, we know exactly which tests will address each documented risk. Ultimately, by thoroughly evaluating and documenting potential risks, we can tailor our audit plans to be more focused and effective, ensuring significant areas of risk are appropriately addressed.
Agreed. This comprehensive understanding and management of audit risks are fundamental to developing effective audit strategies and setting the stage for detailed planning and execution of audit procedures.
Scene fades out as Alex and Jamie continue discussing and planning their audit strategy.